The world's biggest company, Apple, dominates every single market with a monopoly, if not a duopoly. Everyone and their mother knows what Apple makes, all the way from phones, which is their most profitable item, which is the iPhone, all the way up to Apple TV. Basically, Apple has their hand in every single honeypot that they can find, and if they haven't, then they're probably looking to get into that market that they do not have a presence in. Howdy everybody, and welcome to another stock evaluation video. We are going to analyze today Apple, which is a lot of people's favorite company, and it's in a lot of people's portfolios. Currently, the price is $139.14. As of October 4th, we had a massive crash all over the NASDAQ, and the stock essentially dropped 2.5%. Now, is this price what it's meant to be? Is this company worth the $139? We shall find out. A quick overview on the dividend summary. Apple does pay a dividend, rather small one though, a 0.62% dividend, which ends up being 22 cents a share for an annualized payout of 88 cents. Payout ratio of 15.77, which is amazing to see. A 5-year growth rate on that dividend of 9.3%, which is really good. They have increased their dividend for 9 years in a row. Ex-dividend date unfortunately has passed on August 6th. However, they do pay their dividends quarterly, so be on the lookout for their next ex-dividend date in November. Now coming over here to the calculator, let's find out if this stock is actually worth what is actually worth. Putting in the ticker symbol of AAPL, we see that Apple's current PE is 27.25, which is very high. Normally we want this of about 20, and well, at 27.25 you can see that currently this is expensive. But by how much is what we're going to find out. Market cap of $2.3 trillion, and as stated, with that 0.62% dividend yield, they are paying out a whopping $14 billion every single year in dividends. Now let's actually start inputting some values. Coming over here to Seeking Alpha, we see that the revenue growth rate year over year is 26.77. Now, to some people that might be a little bit high, and to some people that might be just adequate. If it really, this part essentially all depends if you believe that Apple can maintain that 26.77% year over year for the next 5 years. Me personally, I'm going to go a little bit more conservative and put a growth assumption of 20% for Apple. Next, we got the net income. Looking at the financials, we see that Apple's net income is absolutely incredible. Copying this over and pasting it over here, we see that it is increasing from 45.6 billion to 57.4 billion. Now to figure out cash flow, we take cash from operations and capital expenditures, and we get an average cash flow of $60 billion. They have increased their cash flow from 53 billion to 73 billion in just the past 5 years. And something to note, their capital expenditures has actually gone down from 12 billion all the way down to 7.3 billion, which is absolutely incredible. This is really rare to see that capital expenditures goes down year over year. Next, we are going to see if their revenue is increasing. Coming over here to Seeking Alpha, we copy these revenue values, paste them over here, and we see that the revenue is increasing massively and also very consistently. They went from $215 billion in revenue to now $274.5 billion in revenue, which is absolutely incredible just to wrap your head around these kinds of numbers. Now we're going to take a look at the debt. We want this to be decreasing. Let's see what Apple has to offer. Coming over here to the debt, we see that, well, their debt is unfortunately increasing. However, with the amount of net income that they are bringing in and revenue and cash flow, you can pretty much say that the debt increasing is essentially justifiable. Next, we're going to go over to the shares outstanding. This will determine if they are diluting their investors or not. We want this number to be decreasing. Coming over here to Seeking Alpha, and we copy these values over, we see that it is decreasing 21 billion shares to now 16.5 billion shares, a buying rate of almost 30% at 28.92%. With the amount of just cash that they are bringing in, it's kind of incredible that they are still having this much money after buying their shares back at almost 30%. And lastly, we got cash and equivalents, and this is going to tell us what we should buy this company at adjusted for debt. Copying these values over, and we see that, well, their cash and equivalents is also increasing, and they have made so far $34 billion just in cash and equivalents, which is really, really great. And now with all of that said, we have the final target share price. The current price of Apple, $139.14, even after the 2% drop today. However, with this said, we see that, well, because of a 27.25 PE and just all of these metrics that we have assumed, we can essentially see that a good target share price not adjusted for debt is around $123.34. Adjusted for debt, however, it goes down to $117.46. Taking into account a 5%, 10%, and 15% margin, we see that the best price to buy this at is at $111.58, $105.71, and $99.84. If this price ever reaches 99 or below, it would be the biggest bargain on the planet to own such a massive, massive company that is just swimming in cash to the point that they have no idea what they're going to do with it at such low price targets. And even though they are paying out $14 billion in dividends every single year with this tiny dividend yield of 0.62, they still have $46 billion in free cash flow after paying this 14.26 dividend every single year. All in all, Apple, biggest company in the world, and it has not gotten that title without a reason. That pretty much does it for this episode, everybody. Liked if you like, comment, subscribe. It really does help here with the algorithm on YouTube. And be on the lookout for the next stock evaluation video.